moment, there is lots of confusion in the market, I think. I'm amazed that equities haven't fallen more. They will fall more. It's as simple as that. I'm amazed that bond yields haven't risen more quickly. I mean, people get terribly excited when the 10-year Treasury note yield rises by 6 basis points or something. Now, come on. This should be 100 basis points and then some in the short term. So that's all a bit sort of odd. I think the markets are sort of, if you like, frozen into inaction in that sense. And so these moves are not major at all yet. Of course, the other sort of, if you like, gut reaction is that when things are not looking too good, what do you do as an investor? You go into you go into safety. Where's safety? The dollar. You go and buy the dollar. So we've seen the trade weighted rise from, I think it was 96 and change up to we're currently 98, 99, something like that. Not huge, but you can see that it does reflect this Keynesian, if you like, gut reaction, or macroeconomic gut reaction. I think that's a better description, which is completely wrong, because what you're seeing is the value of credit being undermined. And what is the dollar? It's just credit. But of course, not many people realize that. They will wake up to it. And I read a credible report this morning that major Chinese banks have basically run out of gold bars. So, that I think is probably where the push is going to come from. People going into gold, I think the big stuff going into gold, that I think is the next move up, and it'll lead silver with it. I mean, this is why I think that, the big banks, members of the LBMA, the active dealers on COMEX are trying to get the hell out of silver because they can see what's coming. When you get a government with a substantial holding like that, it then becomes very much a political issue. And I think it's not beyond the bounds of possibility that the reality is that if China tried to sell down its US treasuries in large quantities, that the US Treasury would refuse to allow the stock transfers.
Yeah.
I mean, Greenspan said as much when he was head of the Fed. But somebody asked him, in those days, China was stockpiling US Treasuries because it had nothing else to do with the export earnings. I remember a journalist asking him, if China turned seller, I mean, wouldn't that be a crisis for the bond market? And he said, well, they can't sell. I mean, we won't give them permission to, if that's what they try to do. And I've always remembered that. Now, I'm not saying that this is something that would become publicly known, but clearly the Chinese are in a different situation. All they can do is that as debt matures, is not subscribe for the replacement. Now, there's quite a lot of, you mentioned, sort of Cayman Islands, London, whatever. I have no doubt that there's quite a lot of PBOC hedging activity, if you like, hedging the risk by various means. And I think that, that's something. It's still earning a lot of dollars. I mean, let's face it, despite Trump's attempts to close off the America's trade deficit with China. And I guess that what it's doing with those is it's not so much selling them into the market, but lending them out to other people, because that's another way of getting rid of it. Well, I mean, there is an argument, if you like, that you could rotate out of gold into commodities, because the effect of the declining purchasing power of fiat currencies has been to lead to a massive underpricing of commodities. And in the article that you referred to, I put in one chart showing copper, which of course is the most important non-ferrous metal because of its quantity and its role. And it's quite interesting just how divergent the prices are. I mean, if you look in dollars, there's a huge great bull market in copper. Look in gold, it's down at roughly, I think it was about 16 or 20% of where the long-term value should be, which tells us that copper, measured in real money, the real price of copper, if you like, is very, very suppressed. So we would expect that to correct. And so if you can see that the price of copper measured in gold could go up 3 or 4 times, and at the same time gold is going up against the dollar, in dollars, this is going to be, a fantastic bull market, if you like, on paper anyway. So on paper, yeah. There is an argument there. But I mean, your problem is storage. Unless you're going to take paper, and paper markets, I think, are getting increasingly dangerous. Not just silver, but all paper markets are getting dangerous. If you're going to actually take delivery, where are you going to warehouse however many thousands of tons of copper you might look at?
Not in my backyard, no.
Where are you going to put all that oil? I mean, this is the reality of it. The way to trade commodities, perhaps, is in companies, corporations, if you like, in the commodity industry. I mean, sort of copper, I think, is a fascinating metal. It's in plentiful supply. So if you talk to people in the industry, they'd say, well, we see no reason why the copper price should rise. But what they don't understand is it's not copper rising. It's the value of the paper you price it in going down. And that's the thing, really, which people have got to understand. The fact is that Russia and China are in partnership as hegemons, and their area, as it were, basically is Asia, Eurasia, if you like, certainly up as far as the European Union. So they have a long-term view of things, and they're not going to react to short-term events, except to protect their own interests. Now, Iran is part of their own interests, obviously, because let's assume that Iran actually fell and the Americans took over the whole place and all the rest of it. You would then have the Americans on your doorstep, just as they were in Afghanistan. The likelihood of that, however, is zero. They don't need to intervene in this one. And not only that, but the agreement which they signed back in January was not like the NATO Article 5, attack one member of NATO and you're attacking the lot. It's not like that at all. It's a cooperation agreement, if you like. And under that cooperation agreement, underneath the radar, you'll find that the Russians and the Chinese will be sending technology. They will be maybe even delivering missiles, spare parts, and all the rest of it to ensure that the Iranian war machine continues to work. That's the way they do it. They will pursue their own interests within this tripartite agreement. That is absolutely clear. They're not about to join into a war and turn it into a mega war. China has to walk very carefully here. It doesn't want to be blamed for the demise, the collapse of the West. Because that's where we're going. I mean, we're going towards collapse, economic collapse, if you like, and political collapse as well. They don't want to be blamed for that. So they're treading very carefully. They're not out there stoking up trouble. It's actually as simple as that. And that policy is not changing. Now, having said that, they will defend their own interests. And if you go back to Trump's Liberation Day, April the 2nd last year, when Trump came out with all these, tariff boards of tariffs and all the rest of it, I think if I remember correctly, the tariffs against China were an extra 67%. What happened was, in the week after that, President Xi did a whistle-stop tour around the ASEAN nations, the Southeast Asian nations where there is a Chinese diaspora, mainly, reassured them that China was up for continue for free trade, and we've got to work together to deal with an America which is trying to stop free trade. So you had that. Now, that's obvious. That was absolutely obvious. We knew that. I mean, you didn't need to be in the meeting rooms to know what he was saying and that. But what subsequently transpired was he obviously talked about the financial end of it. And there are two aspects of this. The first was payments, trade settlements through the CIPS, which is the Chinese International Payment System, which does without the dollar. The dollar is not in the middle there. I mean, if I was to buy, I was going to say guilder, but you don't have them anymore.
Unfortunately.
If I was to buy Gilder, out of sterling, I would first of all sell sterling, buy dollars, sell dollars, buy Gilder. That's the way in which the system works. SIPs bypasses